We have breaking news. The world is coming to an end. Markets are crashing. Everyone's panicking. Sell your gold, sell your kidney, sell your house, sell everything. Just playing. Uh, good morning, good people. I want to check in real quick. If you're not entertained, I don't know is what would entertain you at this point. So I want to check in real quick, share my 2 cents on a couple things, and of course, outside of what we're witnessing now, some type of sell off, whatever. Boohoo! Don't pay attention. Once again, there's nothing like having something physical in your hand that the world needs. That will definitely give you a more sense of a stability than anything else. But I want to share my 2 cents, and beyond the correction, whatever you want to call it, let's just zoom out because at the end of the day, I trust and I do believe in Jerome Powell that he's going to do the right thing. And unfortunately, it's not what I would want him to do, but he's going to print because if something broke or is broken or revealing itself from under the surface as having broke, then what they're going to do? They're going to make it rain. And then when they make it rain, what's going to happen? We all know that. So let's just stick to the script, stick to what you know best, and let's just try to make some sound decisions based upon this. But anyway, welcome. Hope everyone's doing well. If you have not as of yet, feel free to let me, give you more of my narrative as to what's going on. So if you haven't yet, hit that subscription button, hit the bell so you'll be notified. And then also feel free to share thoughts, ideas, suggestions, comments, whatever, because I love to make sure I check in with my people in here. But I want to share my 2 cents this morning and give you some graphs, some charts that will, I guess, help you to better process things from a much longer term perspective. Because outside of 5,000 gold, 100 out of silver, whatever they corrected it to, I'm still beyond confident that we're going to see a greater surge in a very short time frame because of what could come in the form of easing, which is inevitable, and or some type of, I guess, pin that's going to set off some type of cataclysmic event that would result in easing like we've never witnessed before. And so we have the M2 picking up, we got velocity money picking up, we got CPI inflation going to pick up, and we have more nations like never before dumping U.S. treasuries and bonds and liabilities and everything else. So what does that spell? Those four alone lets you know that there's going to be a flight to safety, flight to stability. And we know gold and silver will be the winners of that. But silver more so than ever before. And I'm literally anticipating $1,000 silver a lot sooner than we reach that $100 time frame. And it might sound absurd, it might sound ridiculous, but hear me out. Because when you look at the forces that have suppressed gold and silver for decades, it wouldn't surprise me that due to forces outside of their control, we see currency flooding into gold and silver in particular at a much faster rate than the previous year of us seeing incremental increases surpassing all-time highs. And literally, I believe that's the calm before the storm. It's literally every nation state, hedge fund, central bank basically jockeying for position to have tangible gold and silver in possession. Because once again, majority of what we're witnessing is not driven by retail. And so once everything kicks in, it becomes obvious where we're heading. It'll make it easier to have $100 days in silver, no problem. And $1,000 days in gold, no problem. That's my forecast. That's my prediction. Those are my thoughts there. And I'm going to share some charts and whatnot to let you know how and what that's all about. And of course, it's just could be some tinfoil hats type stuff. But then again, look where we're at now. Who would have ever thought that we would be in all-time high territory, regardless of whatever might have been the trigger that led to this mild correction. But we're going to go through a lot of charts, stats, and facts. I'm going to, of course, get your thoughts on that. But before I do that, let me just check in. My people never know where you're watching from. But it is a good 14 degrees in Metro Detroit. Nice and chilly outside. The snow is still sticking, and it's just yucky outside. And so let me know where you're watching from. Feel free to leave some thoughts, ideas, suggestions where you're checking in from. I like to, just reminisce and and kind of live out the lives of others that are in warmer climates or whatnot. Okay, and also if you guys have not, I want to encourage you, take a minute, test your silver IQ. Links in the description. 15 quick questions make a world of difference to open up your monetary literacy, to get you thinking outside the box, because literally that's what you need to do right now. That's what you need to do right now. Okay, so let me just check in some price action. So literally within me setting up this stream here, I've noticed that as soon as the Crimax open, here we have silver drop. Let me refresh this page because I'm sure it might have corrected. But then again, like, this is it's it's actually it's kind of boring. I must admit. Like, I was, debating on whether or not I was going to stream, just because, like, outside of the narratives that's being given to us, and once again my screen is not refreshing. I wonder why. Let's try a different indicator to see what we can get here. And so literally it has my system acting up on me. But so we got gold down $200. Okay, we got silver down $5. So it's 110 and $5,200 for gold, silver. Okay, once again, the cat's out the bag. We all know what's happening. They're having issues, supplying the physical while the demand is continuing to surge, and the price is the final determinant as to who wins. But really, really, we're witnessing what I consider to be, metal supremacy. Metal supremacy is resurfacing. More people are waking up to how important gold and silver is. And mind you, as I just mentioned, the average retail person don't even pay attention to this stuff. So don't worry about it. And then we have information coming out today as to how I'm everywhere today, but let me share with you some things that you can't really like make this stuff up. Look at where the SEC is trying to divert people's attention. This came out this morning based upon some comments from the SEC chair. It says here, SEC chair signals green light for crypto and 12.5 trillion 401k retirement market. So literally from let me share this. So literally from the SEC chair, Paul Atkins says now is the right time to open 12.5 trillion 401k market to crypto. And so look at that. So at the same time he said this on the screen, look at the price of Bitcoin, 87,000. Once again, 87,000 compared to, something that was created 16 years ago from a penny to now, fantastic. But our government's trying to steer people towards crypto at the same time we're witnessing all-time highs in gold and silver. So you can tell this, to me, is a coordinated event to try to get people's attention diverted off of what is true, try to test it and put it on something that the Western world needs to succeed. And of course, as a result of everything I'm about to show you, when Jerome Powell does what he has to do, or whoever the incoming Fed chair does what they're supposed to do or have to do to bail out the banks and the system, but ultimately destroying the currency, Bitcoin is going to go through the roof. Okay, so that's not a surprise. I'm sure you're all aware of that. But let me make sure that I've been doing a lot of talking here. And so let me just refresh the screen so I see people sharing update on price. And, outside, I'm probably going to spend more time talking about these things. But then actually, as I mentioned, it's quite boring, like really boring. But boring in the sense that, once again, it makes a big difference when you have something tangible and physical in your hand that the world needs. Like, it just puts you in a much different level of confidence, because it don't matter what they do on the screen, no matter how many futures contracts they slam. If we went to war today with whoever, or if a major banking event came down, we know what the Fed's going to do. We know what the government's going to do. So, in knowing that, it's only going to intensify, and it's going to increase the demand for people to dump U.S. liabilities and currency. And where they going to run? And silver is still the most affordable, the cheapest monetary medium that mankind has. And so it's like, to think that we're not going to hit $1,000 silver sooner than we hit $100 silver, and $10,000 gold quicker than we hit $5,000 gold is quite funny. Okay, but I see here Bitcoin's down. Woohoo, something happened. I don't really care what happened. Okay, so let me get into what I wanted to talk about. And so today, and wanting to put together this stream, my whole point was to give you some charts and some graphs to let you think long term. Mind you, this kind of plays into perfect timing, because we're witnessing some type of drawdown. Okay, so people are spooked, people are panicking of some kind. I'm sure the markets are responding. And once again, when everything's built upon the safety and the upkeep of the banks is good to say. We know that it's just a matter of time before something's announced and more currencies created. But what excites me most is the $100 silver moves daily that we're going to witness soon enough, and the $1,000 gold days that we're going to witness at the same time. And so real quick here, let me just share with you the S&P 500. So it looks like Google, Amazon, the magnificent seven outside of Meta is not looking too magnificent right now. And so I'll let the market analysts and everybody else worry about that. But what I want to talk about is narratives and how here's some headlines here. I'm gonna put together a case of everything I want to talk about, regardless of market activity right now. But Trump called Fed Powell a moron after central bank holds interest rate steady. So here we are now, day after what could be considered the shock that spooked the markets. Jerome Powell in the FOMC meeting not doing what this administration wanted to juice the economy to make it appear that everything is hunky dory. Okay, and as a result of that, we all saw the question that was put out before Jerome Powell, and I'll play this for you right here because this is what people speculate that led to the surge of over $200 yesterday afternoon. So listen to this.
Significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Okay, credibility of the Fed. So hope you guys heard that. They're not concerned with the credibility of the Fed, and they do keep a look on asset prices. And there's a question about gold, and these are things that they're clearly watching, but the world watching. And it's not necessarily about what the Federal Reserve does. Everyone has already come to the conclusion that there's no solving something that can't be solved. And so literally the only thing that will take place from this point on is more debt, debasement, and destruction. So with these type of figures here that are unsolvable, we know that it's inevitable for the government to respond with more of what they've already done to get to this point. So as a result of that, everything we witnessed to this point in gold and silver is literally people front running what is coming, front running in the sense of getting physical position in gold and silver, and the decoupling of the physical from paper, which is still underway, because at the end of the day, it's all about protection, wealth preservation. And so central banks led the way with gold over the last several years. Now we have China bringing in silver as a critical mineral, in the U.S. even recognizing silver as a critical mineral that is necessary to sustain life for the most part. But then again, there's not enough above ground at the current price. So when they drop the price to 110, that's still peanuts compared to where it has to go, because the necessity to acquire and to use gold and silver in particular is much greater than this current spot price reveals. And so literally the way we got to $100 within this last several weeks, months, was a slow progression to a newer level of discovery of the USD price in silver and in gold. And after the events that unfold, if anything we're experiencing now is a part of what these events might end up being, then it makes it easier to see $100 silver days and $1,000 gold days for starters. Because once again, gold and silver have no ceiling because fiat currency has no floor. So these are things that's going to be interesting. So what I wanted to put together or show you guys was some things that I'm keeping an eye on. And so outside of the narratives, we have every nation state running to physical gold and silver. And I want to share a video with you that is a good reminder of, let me grab it real quick. Another video from December that I documented, and I want to play it again because it plays into the reversal in policy and why more people should be concerned, because QT ended, QT ended and QE began, but they reclassified it under another name. And it's activity like this which will result in the increase of their balance sheet, which will then result in the increase in the velocity of currency, which will then increase the rate of consumer price indexes, CPI. And those are sequential events that will take place that will lead us to the $100 silver days and the $1,000 gold days that will come faster than we anticipated. Carlos, appreciate you, man. Says, in the invasion, Trump ordered 75-nation ban on welfare-dependent migrants. Okay. That's something to pay attention to. Thanks for bringing it to our attention. So let me play something real quick and go from here. So listen, this is from December. And so this is it was posted again, but this was the announcement of the end of QT when doing a press conference. He was asked a question about policy. And when he made these statements and he changed the name of their QE process from QE to bank reserve management, I'm like, oh, okay, this is going to really, really not go well with our allies and the rest of the world. But listen to this. I'm going to just give my narrative on top of this. Listen to this.
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in treasury bills, which will foster both a more treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because of the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start reserves to start gradually growing to keep up with, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Okay, so let me just summarize this. What he mentioned was the stopping of QT and the increase of reserves that has to stay in line with the proportion of the growth of the economy. So he mentioned that reserves will continue to increase. They have to increase, and an incremental place to where you won't notice it. So when he said that back in December, I'm like, QE is starting, but they're trying to give it a new name. And that's when things really begin to pick up, greater surges in gold and silver. So these are all four signs to what was coming. And so literally a good way just to see where things are heading is to look at where we've come from. And so on the screen here, you have the Federal Reserve balance sheet. And so literally, as you can see here, it's right down here. You see that little hiccup there? That was the end of QT. And so literally QT ended here, and literally this uptick here is what I believe will be the primary driver for $100 silver days and $1,000 gold days. Because mind you, we just came off of this. Let me zoom out. We just came off of something that the world has never seen before. From 2020, we saw 7 trillion-ish brought into existence as a result of a health situation, unprecedented policy. QT began, then we started coming down, and now we're at the turning point again. 2026, January 2026 marked the turning point for the reversal of everything that they tried to contain but couldn't, because there can't be a monetary system without the expansion of the monetary base. And so literally this year starts the uptick of the Fed's balance sheet, and he mentioned about taking the mortgage-backed securities off and letting them roll over to treasuries. We're going to increase the treasury balance to provide ample reserve. He said ample reserves for the banking system and the economy. And so literally, mark my words, this turnover is the beginning of what will drive gold and silver to prices that we could have never, ever imagined. Because this is the beginning of 2026. And we're only 29 days in, and we're witnessing unbelievable price action in gold and silver, but it's just the calm before the storm. The storm hasn't even started yet, and that's what I want people to understand. Literally, what we're witnessing now, this is just what's going to be considered in the history books pre-market jitters, pre-warm-up jitters compared to what will come as a result of this thing here. And this is just one of another 160 or so currencies that will all be forced to flood the world. And so this is important because as the balance sheet ticks up, what it's going to do is show the rest of the world that you can't hold U.S. liabilities any longer. So what will that then do next? This is where it's going to go beyond comprehension. On the screen here is the velocity of the M2 stock. So this is M2 in circulation, and this is the rate at which a dollar changes hands within the economy for goods, services, and stuff like that. So literally, what you're witnessing here, this too is the latter part of 2025. And so literally, let me see, they don't even have, let me see if I can get up to date. They don't even have 2026 on here. And so we ended the year with currency changing hands faster. And then I was looking at this chart. I'm like, man, this chart looks familiar. What does this trajectory look like? And then it got me thinking like, man, this sure do look like gold and silver. It sure does look like gold and silver. Let me share this with you. Let me find my chart here. So mind you, the chart I like to use is acting up big time right now, as if like their servers can't handle the amount of action. But all this is to say, this is just the warm-up phase, people. Regardless of what we're witnessing, and if my pages, see, like right now, for whatever reason, the primary gold and silver page that I'm trying to get to is not even working. And so that is interesting. So let me try a different way. Wow, this is something else. I'm forced to go to a chart that I didn't want to use. Let's go out year to date, go for 1 year. Okay. So I'll just use this chart here. So similarities, looking at the M2 uptick, it happens. And once again, this is just me putting together narratives. It could be in the same ballpark or it can be far-fetched, tinfoil hatish. But given what we're witnessing, don't be quick to judge. So literally, this is a silver chart over the last year. And mind you, given that we've been suppressed for decades now, this looks like it's like, man, this is historical. But yet, based upon the way I'm trying to describe it, it hasn't even began yet. And so this chart here represents the last year. And then this chart here represents the last year plus, because once they update the M2 velocity, it's going to be higher. And so literally the Fed they don't update in time. So this chart here is from last year and it goes to 2024. So literally this same upward movement coincides with gold and silver also trending back up. So literally more dollars have been moving hands, and I wonder where those dollars have been moving to. Obviously to safety. And so to add more to this narrative, as you can see over here, this is the 2020 slow to spread, 15 days, print $7 trillion to prop up every system. The M2 velocity collapsed, meaning that people were not spending. They didn't start spending until all the stimulus checks and stuff start happening right around here. And then this is the result of what we're starting to see. But once again, this is 2025. So when 2026 kicks in, more than likely they're going to discontinue reporting the velocity. Mark my words. They're going to discontinue reporting velocity, because if this thing here shoots up the way the gold and silver shoots up, you're going to be able to see the correlation a lot easier. People are getting rid of dollars faster at a much faster rate. And what are they buying? Obviously, they're buying something to protect themselves. And so we had a recessionary falling off the cliff of velocity. People weren't spending. A lot of layoffs. People were concerned with spending. Here we got an uptick. They're going to cancel M2 velocity money chart pretty soon. And what we're going to witness on this screen here is the Fed's balance sheet, which beginning of this year is ticking up. Once it accelerates upward, then you're going to see those $100 silver days and $1,000 gold days. Because what that'll show us is that game is over, match set. The Fed's balance sheet, which peaked at $8.9 trillion as a result of $7 trillion that was created to stop the spread. They're going to shoot past this 8 or 9. They're going to shoot past 9 trillion easy. So the same way we had this surge here during some type of unforeseen event, this unforeseen event here, whatever is transpiring right now, when they tell us the narrative of what it is and the reason why they have to intervene is going to be because of the next unforeseen event. And this right here is what that's going to look like. And so with that being the case, it makes it easier to say you're going to see $100 silver moves and $1,000 gold moves. And it really kicks off when we see $1,000 silver an ounce. That's just the beginning. Then we're going to double easy to 10,000, 5,000, 10,000 is easy. And then after that point, we're off to the races. So literally, I consider everything that we've witnessed to this point just to be the tremors that will lead to the big surge that we're going to see, that the world will not look the same after that. Because this is just all in USD terms. Wait till we see everything else priced in any other currency this, to U.S. citizens is irrelevant. And so it's these type of events here that lets me know, regardless of what's happening today in the markets, they're pointless to really talk about it, because fast forward to what will take place as a result of the Jerome Powell and his buddies doing what they will inevitably have to do, lets me know that right now silver is too cheap. It is too cheap. Because think about this. If any of this I'm saying is correct, where we see $100 days, think about this. It's going to disrupt the bullion industry in general. Coin shops, online dealers, they're not going to be able to sell to you without the premium far exceeding the surges in daily activity. So it's going to be very unstable. And unfortunately, this is what just me thinking, you may not be able to move gold and silver for fiat, because no respectable business owner will sell you an ounce at $1,000 today when tomorrow or next week it's anticipated to be 1,100. It's like that business model just doesn't add up, because you won't be open for long. But then again, when it comes to buying it back from you, they're going to definitely try to they're going to be looking to try to buy it back from you, given the banking structure, if they're able to get access to their cash and to their deposits. And so it's like, man, this is where things going to get really crazy, because if this plays out the way that it appears that it has to, it's going to be so chaotic that anything really won't make sense. I mean, that's where things are heading. And that's the part where I'm like, while activity I'm witnessing now is becoming boring to me, I'm not really excited about what I believe is coming, because I'm not sure it's going to be enjoyable there either. So, the best thing is to, look at things for what they are. You can only manipulate, suppress, and lie and deceive people for so long before, what's done in the dark must come to the light. It's biblical. You can't keep suppressing something that is necessary for human life down to a point where it's just beyond able to actually have a true price as to what's going on here. So expect more craziness in the days ahead. And one thing I do guarantee, this is what I guarantee. Let me show you this. This is what I guarantee. All the stuff I talked about today about the currency is going to be created, the Fed's balance sheet, which is going to double from 9 to 18 to 20 trillion after this next event. What it's going to do is going to push gold and silver market cap value that much higher. And so literally, if gold and silver, let me refresh this. This is the estimate of the market cap. So if gold and silver right now, despite what's happening in the world, is $36 trillion market cap, what'll happen when the Federal Reserve adds another 7 to 8 trillion into existence? And then you got the ECB, they're going to create another 5 or 6 trillion. Then you're going to have the Japanese yen. So think about this, if every nation goes on this, we got to save our economy, we got to save the markets, we got to save the banks, because at the heart of all this, the banks are the most important entities that have that exist, because they're the blood to the body of finance. And so anybody and their mother going to race out to try to get something tangible and real in a worst case scenario. And where do you think gold and silver is going to be at when it comes to this 36 trillion will be what, 100 trillion, in a year or two, give or take, because we're throwing around trillions and billions like they're light. Those are numbers with zeros, multiple zeros behind them. And look at silver, a measly $6 trillion. Everybody out east and out west is now acknowledging and recognizing silver as money for the people, on top of all the industry demand, stuff like that. And it's only $6 trillion. And so I say that because I love to talk about the gold to silver ratio. And if you got to ask yourself a question, when it's about being able to acquire as much of anything as you can to protect and preserve, you're automatically going to, from a retail space, you're going to go to what you can afford the most of, especially if you foresee it being the most viable and utilized in the system. And what I'm talking about is silver. And so if we're looking at $36 trillion gold and $6 trillion silver, it's a no-brainer to go with the cheaper of the two, because technically speaking, gold and silver are of the same use case in this current environment, protecting yourself against the creator of these. And so it's only natural to go get the cheapest of the two as much as you can. And silver being $100 right now is still well beneath the typical gold to silver ratio. And so think about if institutions decided to then dump trillions eventually into silver, and it became more on par with gold's market cap. We're looking at that Chris Dwayne 1-to-1 ratio like nonsense that people like to say. I'm not even going to say it's viable, but because of the increased demand of silver, which is coming, that market cap there of $6 trillion will be more in line with gold. It'll be a lot. It's going to be a lot closer to gold. What will it be? I can't tell you, but let me show something else. So literally one thing I'm confident in is that we're going to see this number right here get closer and closer. And the number I'm talking about right now, the gold to silver ratio is 46. And think about this. If trillions are brought into existence, those trillions make their way into gold and silver primarily, amongst other things. This ratio here would tell a much different story. It's going to get lower and lower and lower and lower, symbolizing the importance and the increase in the valuation of silver relative to gold. And so, regardless of what's happening in the markets, silver tells the true story. And at 46-1, that's still kind of high. That's very high. And so I'm looking at, if all this plays out, and for those that are coming in now, if you didn't get the full gist of it, I basically walked through how it's going to be the Fed's balance sheet, which is ticking up, and the velocity of currency, which is ticking up, which resembles and shows that there's no confidence in holding liabilities anymore. And you have inflation, which nobody wants to touch on. But once again, inflation is not going anywhere because it is a monetary phenomenon based upon the currency in circulation. So if you get all these trillions that I'm talking about being created, it's going to show up in the sticker price of everything that we need for life, and it can only go up. And so we all know that the numbers they give us are fakes. But think about this. Remember that second surge I've been talking about? That second surge is going to also be real. So let me just give you a little something. This is extra. But the second surge of inflation, when it hits the streets, because next time the currency that was created was contained. Like the currency that was created during the GFC, not GFC, but this slow to spread was contained because the Fed created an additional window to park those funds for the banks. But when we see that second, sir, let me see here. Let me see if I can find it. There was Rafi Faber put out a great chart that really painted a good picture as to looking at history. Let me see if I can find it. I probably won't be able to find it, but I've talked about it before. Basically, just overlaying the past 5 years inflation compared to the 70s, and everything was right on course with a possible second wave that would hit the U.S. as a result of what we're witnessing now. And as the Fed reverses course, QE or reserve management, as they call it now, increases, they won't be able to contain that because it's going to hit the streets. And whether they try to or not won't matter because, as I showed you, the velocity of money, meaning those that are holders of U.S. liabilities, will begin exchanging those things and redeeming them faster. So this is the epitome of what I call the great redemption trade, where everybody realized the importance of redeeming Federal Reserve notes and getting back into U.S. minted, or as a citizen, U.S. minted coinage, i.e. gold, silver, or gold and silver in general, but get out of debt and getting back in assets is what's going to happen. So these are all things that I think are going to really play out. And regardless of what's happening in the markets today, it's just, unfortunately, it impacts a lot of people's lives, but it's all what I would consider to be tremors compared to the amount of craziness we're going to see in the gold and silver market. And once again, I'm trying to refresh my page where I get my primary price action from, and it's not working. So I wonder, is it down? But that is ultimately what I wanted to talk about today because I think it's important. And I think literally we're literally in the beginning innings of all this. Like literally, this is just starting. And while it might appear to be very impactful as well as newsworthy, at the end of the day, the world has already made a decision where we're going. Gold and silver is a part of that future. Wow, the U.S. wants everyone to focus on, crypto. And so as a result of all these trillions that are brought into existence, the U.S. will focus on the digital asset space. And so this administration will definitely love to use the idea of trying to make sure everybody get their 401ks involved in the digital space. And so when the SEC chair comes out talking about 12.5 is ready for your 401ks, the additional trillions that will be brought into existence, they're going to want those to flow into crypto. And so therefore, the crypto space will surge as well. And so it's got to be crazy out here to think that 65 years old. Wow. It must be the hair, huh? I'm a lot younger than that. um, but no, I'm an 80s baby. Oh man, that's funny, right? I had to not acknowledge that one. That was funny. But anyway, so this is just what's happening. So I'm more than likely going. I have more to talk about, but for the sake of keeping things short and concise, straight to the point, I think I've given enough to chew on of things to consider. Don't focus on the here and now. Zoom out, get the broader picture, look at where things have to go, focus on where things could end up a year from now, 2 years from now, rather than today. It'll help calm your nerves and keep you, not from not chasing narratives based upon who says this or what clickbait you see on TV. Focus on the fact the economy can't move forward unless they create more of these. So front run that, get physical, because once again, $100 silver was cheap compared to when it's 1,000. When it's 1,000, you're gonna look at like, damn, how much can I get for 1,000? And that's where everybody's situation is gonna be different. And then when you see numbers like that, when you see 4-digit silver, then that's when retail, people who don't even pay attention to none of this, will be like, damn, is it too late? Then here they come. And so literally that's when fractional silver will be like the next big thing. And so to give you an idea as to what's coming, let me share something else with you. Like just let me just share something else with you. This is let me share something else with you. Let me where's it at? Let me see here. I don't have it. Shoot. Anyway, but I'll get into another one that. But just me trying to stay ahead of trends, knowing where things are heading. Position myself before I talk about it for sure. But making sure my community knows about it, because once again, it's all about making sure everybody goes along for this ride and able to, for the most part, maintain sanity. Because you who are tuned in, you're aware, you have made preparations ahead of these times. There's 99.99% of people who are not paying attention, who have no preparations, who don't know what's happening. Those are the people we should be concerned about, because when it gets crazy, it's gonna get real crazy. But that is what it is. All right, good people. Well, that being the case, just want to check in, share my 2 cents on some things. Don't get spooked. Do what you continue to do. Love, live, laugh, learn, and enjoy the moment, because we're witnessing history. We're in the driver's seat to what will be the greatest events that have ever unfolded in all aspects of life, politically, spiritually, monetarily, physically, you name it. Yeah. And make sure you stay plugged in. But other than that, be blessed, be safe.